Hey guys, what's going on? So this is the Saturday Sunday market breakdown, and yeah, essentially this is the watch list. So I've got GBP Aussie, Euro US dollar, Aussie US dollar, GBP USD, USD Swiss. Then I've got GBP Swiss, Aussie CAD, Euro GBP, Euro JPY, and Aussie JPY. The most important thing about this week is basically filtration, because there's a lot of pairs that I have on here as well that may or may not shape up, and going into every week, that's something that I do take into mind, that I'm not expecting price to give me what I'm looking for. I'm just anticipating that price is likely to be moving in the same direction. So if it does shape up to what I forecasted or something very similar, which meets my trading plan criteria, then I can execute accordingly. Otherwise, I'll have to carry on and do other things. And I just wanted to share that because it's not a case of, for example, now I'll just pick up a pair. Let's just go Aussie US dollar. And you can see here with Aussie US dollar, as you can see, I have changed my chart colors. I kind of went with IBIS, which, you know, just for a bit of fun, and I do like it a lot. So what we can see over here is that we have a bit of liquidity where price is squeezing into it. Now, what do we know about squeezes? Typically, with a squeeze, we have to be careful because price can get there, but it can continue going into the upside direction. So what we want to be wary of is that price is just not going to continue doing some crazy stuff like that, which is obviously right now unlikely. It looks like it is strategically moving into that direction, but what we do need to see is if we go down to the 4 hour, we see some development of structured deliberate price action. So if we just isolate this section here, because obviously remember it is overall in a larger squeeze, so this can evolve, and then next thing you know, you're looking for that, and then it's up here, and then next thing it does this, and then you're evolving again, and then you don't want to get caught into something like that. And that's what I mean by getting trapped into a squeeze. So what I just want to focus on mainly is if I get this trade here, then I'll be looking to actually take the short. That's the only thing I'm looking for right now. If I miss this, then I understand price could come down here and it could give me something a little bit more deliberate, which might take some more time, and then I might get something in there, which then could be enough room to create phase 1, phase 2, phase 3, and then it pushes to the downside, and then we're breaking these lows and moving. So again, understanding that second trade, I know as well, again, that if I take this trade, I might end up sitting in it to be around about here for a while in this region, to then see that potentially develop for it and then to come here. But then there's the probability that it could come over here and come all the way back up. So I know how I'm going to be managing that pre-hand and apply that same methodology with most of the trades that you're going to see on my watch list this week. So just putting that out there, just making that very clear. That is basically the thought process of this trade. So if we go back to the daily, what I'm really looking at over here on the daily is I'm just looking at this as a potential area where price is going to tap into this area here. And when price taps in there, I want to see a H for, or even better, if we get a nice daily close, which will then just show that we've kind of pushed up, completed on this little structure here. And we're now indicating that we are moving to the downside, but dominantly we are in a uptrend, which is backed by weekly weight. So this is something as well that you have to also take into consideration, that when you are looking at this trade here, look at this, we have that strong weekly candle which did technically tap into a base, nothing significant, but we tapped into this area, we then stalled, pushed down, retraced completely, and then we started picking up corrective price action to the upside. Now there's two ways I'm looking at this, and then this applies to the other US dollar related pairs for Euro US dollar and GBP US dollar, which I have on watch as well. We can see here that the 1, 2, 3 is there, but at the same time we have to be neutral in the sense that if price did just push up for whatever reason, then we have to be ready to pivot. And if we got price action which was a little bit messy and took some time and it did some crazy stuff like this, eventually we would be able to wait for that and get priced into the long. Now, where a lot of people do go wrong, and where I was previously going wrong, obviously this is the daily, so we're not looking at the daily structure here, but the same methodology when we break the high, a lot of people will be getting trapped into this area here, and then they'll get trapped in here, not seeing that, you know, we need that sort of clear equal spacing. Obviously this one isn't so bad, that one there, but ultimately when you see that one there and you can see it's done everything that we would have anticipated through this forecasting stage, you would have then said, oh, man, I shouldn't have taken the loss here, shouldn't have taken the loss here, but now I've got in the trade here, I've already taken 2% loss, stop loss is like, let's say down here. So then when you're running up here, yeah, your trade was correct, but you're actually back at break even because of these two losses here. So just want you to bear that in mind, that capital preservation is equally as important as making money, because it's all great being able to be correct in the market, but if you're constantly giving profits back in the wrong areas, you're going to be doing this break-even dance for a long time, and you don't want to be doing that. So moving forward, you can obviously see this one's very plain and simple. This is just one big messy price action, not something that is high probability in my eyes. It's just coming into this area here, we're going to push away. The more of the push, if we get something like that, it's even better. And then in those areas, you do want to get positioned. Obviously, up here is high risk. And then as we get more follow through, and it's somewhere down here and we get something like that, that's going to be a much more high probability, because you can see that we are showing some significant signs of a pull away. So that basically is it for Aussie US dollar. Let's go back to the top of the watch list. So DXY. Now DXY is slightly more of a trickier one, because what we can see is just not the best of clean price action, but we also accept the fact that, what phase are we in? We're in this phase here. And because we're in that phase, what do we know what comes with the territory? We know that price can mess about for quite some time until it shows its hand, right? And knowing that, we then come to the realization that, okay, great, so how can we actually take advantage of something like this? Well, we can actually practice patience, and we can apply the methodology of what we already know for our trading plan. So we can see at the daily, we are meeting with that low there. We can go to the 4 hour, and on the 4 hour, something very important here is that we can see that we're in the middle of nowhere. If we jump too low on the time frame immediately, we're going to miss that, and we're going to start making some forecasts up saying there's a 1, 2, 3, this and that, because it's so easy to start believing something. Now, using a bit of pattern separation here, we can see that, yeah, we did have this this bit of price action here, and then it dropped, tapped into that. So again, you can make a picture out of this, but more importantly, I saw this as price came up into this area here, created this, created a little bit of liquidity, broke below, left that little footprint there, tapped it again, and then sold off. So this is all quite deliberate at this point. This part here was very key, because we broke the low. We broke it once, broke it twice, and I don't think we're failing to go lower. I think we're actually creating more lows, and we're moving slowly to the downside. But right now, more importantly, I think we've left a footprint similar to what we did over here. We did over here now. So now we need to just wait for similar price actions like that, come into these areas, and then get involved. Now, is there a possibility that we might do that and still not get an entry? I think that's also very possible. This may not be the most this might not be the most common structure we're going to see. We might see something where price comes up, sells off, and then does something like that. We wait a little bit longer, but we get a much more clearer structure, still get in with a decent stop loss, and we get into the downside. So in the best case scenario, that would be better, but we have to also understand that coming into London session, where would we be? We'd probably tap into these areas, get momentum kick in, and then maybe it corrects for a few hours, and then we fall into even New York session, and then we get that. So that's what I'm kind of anticipating, and I think that's also something that I think is a massive takeaway for a lot of people, that when you are pricing up your structures and developments, when is it developing? Because a lot of the time we don't see a lot of these structures, not always, they do sometimes, but depending on the pair comes from studying, they don't always go through this phase where, let's say this is London session, and then this is Asian session, this is New York session, right? And because of that, you might see price then makes correction here, and then goes London session, it goes up, right? And then it goes back into correction, and then New York, and it comes back down, right? Or whatever after. So that's basically the thought process behind it, where I'm always just kind of looking at that as a cross-reference, as what time am I forecasting this? Because if I forecast it too early, I'm looking at the charts unnecessarily. If I forecast it in prime time, where I know liquidity is going to be building up, and obviously I'll be looking at it in preparation to be well prepared, I'll know that, okay, great. So if I've got my time slot here around about 1-2 o'clock New York session, structure should have been developed, gives it more than enough time to give it a weighted flag. By the time New York session opens up, I can get in, and then prices are already moving, could move slowly, could move fast, whatever. But I know that if the price does work in coordination with something that I've tested, a structure that I've tested, then I know that there's a high probability that even if I'm wrong, most cases I'm going to be right. So again, it's like not the case of trying to be perfect, and I think that was one of the biggest mistakes I made before as well, was constantly trying to think that because I forecasted this and I did everything correctly, I'm going to make money every time. That's not necessarily the case, and it's just something that most people need to bear in mind, that we need to be patient when other people are trying to hammer in trades. Like, I'll be honest with you, you could look at this and get it all wrong, and that's fine, right? You might have not been able to catch a trade. Next thing you know, the trade's all the way down here, or you saw it open here, and then you were over forecasting, and you were like, okay, yeah, I'm going to wait for it to come here, come back up, and then this, and then all of these things, and it's like, fine, but you need to learn from that and realize that was there more than enough. And usually, when you zoom out and you look at it a bit more holistically, you can see absolutely, if you look at it for what it is, there was actually no reason for this not to go. There was that low there, right there, which I think is also another important factor that most people need to realize, is that we didn't kind of meet with that as well. So does it have a reason to? Yes. Did it have a reason to continue back up higher? Yeah, absolutely as well. So again, it's you pick and choose the risks that you want to take. You're in control of that. So let's jump straight into it. So S&P 500, phenomenal. Obviously, I'm going to go into the daily and weekly. I think daily just paints a clear picture that we've made a full recovery. Perfect. If you got involved in anywhere around about anywhere within this candle, I think you're good. Even if this dropped off like that, you're not really in a bad place, because realistically, it's not common for the S&P to decline for that long. This was a huge sell. It's very similar to what we saw back in COVID times, but it's just interesting that these recessionary periods per se was getting larger and larger, and sharper and sharper. So the recoveries are becoming quicker and quicker, which just shows me that there's a lot of people willing to put their money back into the market now. So next time we have a major dip, we're probably going to see some pretty fast, strong recoveries as well. Obviously, I'm not going to impose that belief straight into the market. I'll wait and see. But in terms of a recovery, this was probably the fastest one I've seen. I thought COVID was pretty fast. But truly, that recovery, I don't know how much percent that is. Let's just double check that. That is from here to here. Yeah, you're looking at, 28% recovery on the S&P 500 in a very short span of time. So again, another extremely phenomenal period of time here. Obviously, it's just a part of old studying here that I've sent it to a friend, but it's there. GBP Aussie, another stunning pair. Look, if I go to the weekly here, we can clearly see this is looking phenomenal. But again, this is not my most preferred pair to be trading. I wouldn't be, hammering trades on this particular pair, because I know the tendencies and the particular habits that this pair has, where it can just mess about and then go in Asian session, for example. So I would want to be more on the cautious side of this, mainly because of the gap. We have this gap here, and I think because that gap is in play, it doesn't mean that this can't sell and then eventually come back up. Like, yeah, sure, that's a possibility, but more importantly, what I'm looking at is how can I take full advantage of this. And really and truly, when I go into the daily, we can see what we're all looking at over here is, okay, price is still in that sort of period there. We go down to the 4 hour, just put a tool. Yeah, and we can see here that price is within this overall corrective section. So I need to see something pretty deliberate, pretty straightforward, something that's just really going to stand out to me, because right now this does look more like a two-touch, and I'll tell you why. We've got a bit of a base here where that was the origin of that overall large move. We had this as a phase 1, phase 2, phase 3. Then what happened was, oops, let's go back. Then we had this piece here where it tapped into the low, which was great. After that, we did kind of mess about, create this mini double bottom, and then we again made this larger messy correction here. We did another one there, and then now this becomes one piece of its own with an internal structure leading into it, which is corrective, which in my eyes is a great sign because it's accumulating a lot of volume. And in the term of where it's going, this had more than enough room to sell. So I don't now believe that this is going to be becoming, the buy into this area to sell. I think this is going to be a full-on recovery back, and that's what I'm really looking for. So I'm looking to play the recovery here. I'm not looking to play the small internal structure. Now I'm aware of how price is moving, which is very important. It's a bit corrective, but we're breaking corrective as well. So then again, this just becomes one big messy piece of structure, and then we end up moving higher. So again, it's GA. So I would, if this was the only thing that was shaping up, then fair enough, I probably would opt into it. But if I've got other things on watch that are shaping up and I had to pick between them, it's very highly probable that I'll pick something else. Just personal preference. Euro US dollar. Do you know what? Euro US dollar is great. It's been a phenomenal pair over the years, but right now, just like the DXY, it's a bit all over the place. So we need to be extra careful with these pairs because right now, as we can see, we are in a corrective cycle on the DXY, i.e. Euro GBP, Euro USD, related pairs as well. So what I want to be looking at over here is just understanding that I'm trading within this corrective zone here. So if I'm anywhere within here, I need to trade with caution because my capital is at even more risk than trading in, these areas, for example, breaking out and trading in those areas and so forth, right? When it's clear, but right now it's not very clear. We're still in a corrective cycle, so that's probably one of the reasons why a lot of people are finding it quite difficult for us to make money. So let's pull that back a bit and go zoom in. So we'll go to the 4 hour quickly, and we can see we've tapped in, but as we tapped into that area, that high there, we then broke lower, we failed to commit further, and now we're pulling back to the upside. As we pull to the upside, it's quite similar to the pair we just saw in terms of the pattern separation. We can see price found a base, created continuation, pushed up, tapped into this, left another little reference point, and then it's going very similar to what we saw on the DXY. If I just invert this, you can see it here, where we did that, correction, push down, left that, and it's cleaner to see on the Euro US dollar, which is nice. But yeah, exact same game thoughts as the DXY, obviously, as they're inverted right now. I'm going to be looking for that insurance entry, so I want to see that rejection here, I want to see the push up, and then if I get a correction like that, I'll be looking to opt into it. Would I have reduced risk entry this? You know what, it's a very tricky one because I probably definitely wouldn't have unless there was clear structure. And I'll be honest with you, looking at that, still getting used to the tablet. So looking at that trade there, yeah, I wouldn't have wanted to be fair. Do you know why? Because even though it played out, I was kind of trading into this little retest area here. There wasn't no two clear bottoms. It kind of felt like it was squeezing into it. It could have felt like a very quick in and out trade because this overall looked like a bit of a steep flag. Squeeze in here, comes in 1, 2, 3 into that section there. I take the trade here, it just drops off against me. And that would have been the thought process there. And that's what would have really kept me out. And I think, again, I wouldn't have done anything differently. So knowing that and looking at what happened over here, and obviously seeing that that could have done this, and all of these things that I could speculate on now. I'll just remove this. I'll just zoom out again. If I look at it, there was nothing I could have really done in that situation. I would have just had to accept that, great, I understood the low, we had a push up, we got not the cleanest flag, and it just didn't meet my criteria, so I was happy to just let it go. And I think that's a very important trait for a lot of people to realise, that it's not always about getting into every single trade, but in this case, I'm going to be looking for this. Push down, tap into these areas, push up, insurance entry, go long. We're not going to cover Aussie US dollar, we just did it at the beginning. GBP US dollar, great trade as well. So very similar thought process to Aussie US dollar. I'm not going to go into this one too much because it's the same. But again, if the reason why I put this one on opposed to New Zealand US dollar, let's say, is just because overall I just like the higher time frame. And I think that's one of the nice things about using a top-down analysis, is that using each time frame unlocks the next one, and it gives you more of a reason why you'd want to have an extra confluence. Like higher time frames great, 4 hours great. So if I go daily, I've got daily structure here, happy with that. A little liquidity points over there, cool. Go to the 4 hour. Even though we're coming in phase 1, phase 2, phase 3, very deliberate, coming in very like soldiering in a very deliberate way, which is nice. And then we're creating more deliberate price action on the 4 hour. Then I go into the 1 hour, and then I can just wait patiently on this. And then maybe if we come in for 1, 2, 3, we might see something in these areas. I will be not going down too low on this one, to be fair. I'm going to wait for something a little bit more deliberate on the 1 hour. If it comes, it comes. But yeah, I'll be looking for some structure there, where it kind of plays more on a hover. I'll be taking that. The insurance entry over there as well, if the hover's not too clean for me. And then yeah, it will just be supporting what we already have. And I think that's an additional nice thing to have, is when you've got structure, but you don't need to act on that particular structure. You can act on something internally within the structure that can make you money, and you can get in with more precision, better stop loss protection, better risk reward, so forth, so forth. So that's basically what I'm going to be looking at on there. USD Swiss. Now, USD Swiss is the last one on my watch list, to be fair, and I really did think that this was a gem. And I still do, to be honest, because if I go to the daily, we can see here that we are within a corrective channel right now. There's nothing being fully determined. There's no two bottoms, two tops. We've kind of V-shaped, or call it steeply moved up, giving off the signs that this was just some sort of steep flag, and this can just really trap people out, and people are just thinking like, oh, we're going to go now, which, don't get me wrong, is very possible, and I'm all for, but again, it could also be a trap because it was quite steep. I'm going to go into the 4 hour now, and as you can see in the 4 hour, you can see here very deliberate price action, which I liked, where we kind of had this as a base, this was kind of now a top, and we failed to continue. In fact, we came here, we retested all of that, we pushed down, that became one piece of its own, and now this is one piece of its own, and it is corrective. So we have to bear that in mind, that this can just come down here, come all the way back up, come do this, come back up, and then it's over here, and then eventually it comes back up. So that's the territory that I'll be looking to be taking a trade into, but that's completely fine. Why? Because if I go down to the trade that I'm looking for, and I'll just clean my charts a little bit, the trade I'm looking for is an insurance entry. So if we're looking at the insurance entry, we can see over here very clearly that even with a 15 pip stop loss to the low, I could walk away roughly around about 10, but even to the low here, I could walk around about 3.8. So even if I'm walking away with 3.8, which I think is probably the much more probable scenario, I'm happy to take this trade for a 3.8% and move on to the next one. Would I take the risk entry? Absolutely not. The reason I wouldn't take the risk entry is mainly because I don't know if this is just going to turn around from here, because we are still, in theory, trading in this area here. Now, this isn't the most significant area in the world, but again, it is just an area where price has a reason to mess about with people. So I want to see deliberate price action. I want to see commitment. I want to see follow through. I want to see that price is doing what it needs to be doing, and showing me a 1 hour insurance entry like that would be more than enough. It would be super clean. I might even be able to get a little bit tighter than that, but Again, that's more than enough. Like me trading into that low, and it could be a general sell-off. And next thing you know, I did walk away with 10%, and not the 3.8% that I was more than happy to walk away with. But again, like I said, because I understood the high time frame, I understood the sequence. It's currently a bit more corrective. I'm more than happy to be a little bit more aggressive once we start approaching these areas and lock in 3%. And then once it's breaking those lows and it does its thing, it does its thing. But I'll have 3% locked in, and that's it. Just going into the watch list. What I'm really looking at over here is GBP Swiss. GBP Swiss, again, not a stunning pair. You can just see in terms of the pattern separation. Usually I don't like these Swiss pairs, but right now there is something here. You can see strong push away. Actually, in fact, I might need to bring out the weekly on this. Strong push away over here. You can see now it's just kind of in that corrective phase, call it phase 2. And then now we are pushing up, correction. So that was one piece of its own, which was messy. We broke this, signified longs. Now we're deliberate. I just want to see one clean thing off a strong push down and a pull back up. So what I want to see is this sell off, or probably push a bit higher, but then sell off, come back down into these regions, catch people on the wrong side, push up, do what it needs to, but give me a continuation in this area here. I'll be looking to go long. Something nice and clean I'll be all for. Obviously this is GBP Swiss, so clean isn't its middle name. So if it doesn't give me a clean flag, I'm not going to take the trade. I'm just going to leave it, walk away, and that's it. And that's the decision I've made on that. Aussie CAD. Look, Aussie CAD it's got potential. It's not the easiest one as well, and I'll tell you why. Look, if you go to the weekly, you can see we're coming from that base. That's nothing majorly significant, but when you put it here, it's like, okay, well, look, we've clearly responded from that. Cool. Put it down here, then you have room for an argument that actually price still could move lower, but then you look at it and you're like, well, it's a long way to go anyway. We're kind of in the middle. If you look at this as an overall range, we're actually in the middle of this overall range right now. So is this the best territory for us to be taking sort of 15 1 hour flags? Yes and no, and I think it's one of those ones now where it's like, well, we had a strong sell-off, but we had a strong pullback now, and for that reason we need to be more cautious. So if I put it back up here, it's one of those ones where I think this could just easily be taken off my watch list as well if it's written off. And what I'm looking for here is daily. If I go to the daily, we can see here we have a low. I'm looking for this to then coming in these areas back, build some liquidity to push back into those areas. But I want to see deliberate price action. So when I go to the 4 hour, I want to see that price is responding to this. So we've had a push away, and this is where it gets a little bit more strategic. So let's say we have a baseline here, we had a reference point there, filled it there, we had this, which is its own piece here, we have that, which is its own piece there, and then obviously a little bit of liquidity, which was retesting this area. So again, it just gets too complicated, but overall what you need to understand is this is just corrective. Okay, this is all corrective. So that's the only thing we need to really be looking at, and not trying to just get too granular with all these little details, because they're irrelevant if price doesn't commit. So what's more relevant is, if price commits, where do I want it to be in order for it to go to the next point? And what I'm seeing it over here is that we've got, oops, let me go back a bit. We've got this little structure here that meets with this liquidity here, which is nice. I need to now see it follow through, break that, middle section's there. So if we can get in here, get clear enough structure, I can then take a trade in this area here to then play it into that low. And then once we go there, I can then look to either take out the trade, be more aggressive, or if we do open to the floodgates, this then turns into quite a big trade. So that's why I'm really kind of putting this one on watch, to kind of just see what happens. But I'm not looking for anything majorly high risk on this. I don't want to be taking anything like if it does that and then comes in, does this. I don't think I'm going to be looking for that. I want to see something which in lieu just kind of just has context, has a lot of context to it, has a lot of reasoning, and I think something like this would be very strategic, but more on the higher risk side of things as well, because it's not the best trade in the world, because we can still come to this base here, come back up, do this, and then do something messy like that, because overall where we're positioned in the middle of this, call it range, in this middle of this range. And, we didn't take that high out completely. We just kind of just about near missed it, but call it tapped into different data. So yeah, it's one of them ones where if this just suddenly just did that, I wouldn't be surprised. And then did this eventually and came down. I wouldn't absolutely be surprised in any way. And I'll just keep that in mind. So like I said at the beginning, this one could easily be written off. Euro GBP. Euro GBP is a nice pair, man. I'll be honest with you. If you look at it again from daily, we can see that high time frame, it's kind of already tapped into these areas here. Strong rejection. It's now in the accumulation phase where it's just basically accumulating all of this. All of this is accumulating within that range. It hasn't really created a proper base. I don't like that steepness of that, so I wouldn't call that too touch there. I would just say that right now we're contained within this area. I would like to see is that price remains contained in it, even if we break out and pull back in. That's what I'm looking for. So again, this kind of falls in the same line with Aussie CAD, and one of the reasons why I put it in the wildcards is because if I do see this breakout push back in, give me a flag, it's more than enough for me to then say, okay, you know what, that's deliberate enough, it is containing within the range, I have context for this trade, I will take that and then I'll manage it accordingly. But just understand that the overall picture isn't the most cleanest, but we are moving in line with what we're seeing on the high time frame, which is that. So this is more when you see it over here on the daily, you can see here that price is just within that, and price could do a lot of things. If we look at it on daily, at least it will come down before it does it, but it could just start doing this. Probably not that, to be fair. But yeah, more than likely, it could still mess about and then do this, and then it comes back up eventually. And then next thing you know, it is going down, and it just took a lot longer for it. So again, I'm not trying to speculate on what's going to happen. This could just sell off. This could just shoot higher. Again, way I'm going to mitigate it is I'm going to let price go do what it needs to do, come back in, show me that deliberacy, give me that continuation here, and then get in short. And I think that's going to save me a lot of time and money and hassle. Euro yen, again, these yen pairs are looking pretty good as well. I didn't want to put too many yen pairs on watch, but what I am looking at over here is that we are squeezing into this liquidity point, but we can clearly see we are aiming for much higher targets. With keeping that in mind, I'm going to keep neutral on this one, and I'm going to go to the 1 hour. What you can see over here is I am looking for a lot more deliberate price action. So I want to see something very clear as day on this, where it's showing me that price is moving either up or down. I want to see strong rejection off this 1, 2, 3, tapping into that liquidity point, breaking into through or below this low here, giving me clear price action. I'm all in. Even if it's for next week, it is what it is. If we start hovering in this area and start accumulating volume and then looking like we're going to potentially go long, I'm not going to take it as a risk entry. I'm going to wait for an insurance entry, only on the reason being that I am looking at that as the higher time frame target, but I understand where we're positioned. So yeah, that's brilliant. So I'm really happy with these yen pairs, to be fair. Just know that it requires a level of patience as well in these ones. So not going to be looking for anything different. You need to see that deliberacy in the market, otherwise you'll get caught into some craziness. But bear this in mind. We had a correction here, then we moved into another correction, and then this could become a correction as well, and then next thing you know, it just has this theme of whatever, right? Could do a lot of things. So we need to just be very much on the ball with these pairs, because we don't know for sure if they're ready to go until they show their hand. And how we're going to see that is that strong push away. That strong push away is going to be the indication that we're going to be seeing that things are going to be turning around, and then we can be patient to wait for it. Honestly, if I could go and just show you a whole bunch of trades where if you had waited for that confirmation and then waited for the insurance entry, you would have saved a lot of money. And it's case by case scenario. If I show you over here as well, just as an example, why not? Strong push away, breaks that low, gives you continuation, sells off. Strong push away, gives you not the cleanest, so you might have not even taken that one. It went away, then came back up, didn't give a trade, and then went off, and maybe gave you something in there, but where are you trading? Really nowhere. Here we go. So we've got a little liquidity point, sold off, broke the low, left a near miss to this section here and the one below. Took out that low, came all the way back up, tapped into this area here, pushed away, entry one, higher risk, call it, missed it, okay, broke the low off that flag, then created a new one, and then went, and then ultimately broke this low, but didn't hit that low there, and went. And then what did we do? We came back all the way back up, and now, do we come all the way back up here or near miss it before we make our way all the way back down? So we have to be kind of more on the ball and patient, but I don't want to over forecast this. I know some people may be having things like this on board, and you're not wrong. There's nothing entirely wrong with this. Don't get me wrong. It's just what I've noticed with myself is when I do stuff like that, I create more for bias. So I like to eliminate as much as possible. Just look at the most relevant piece of price action, and the most relevant piece of price action is this section right here. We've got this potential little push here, then we've got price now at that area. What's possible and what's probable? Well, it's probable that we'll continue higher, but what's possible is that it responds to this 1, 2, 3. It's just usually we don't start with a correction into a correction, but what we're going to see here is that if this responds to this and we get momentum rejecting and then a continuation, it's clear as day that we're going to continue to the downside, and it is responding. And it just was one of those ones you add into your sample size of, it wasn't the best, but it responded, and we understand that these things happen. Aussie yen, look, this is the last one, but it's pretty much the same. This week I did opt out for commodities and indices. I did analyze them, and yeah, they were okay. It's just, again, it just wasn't something that I really saw anything majorly happening on it, so kind of put them aside. But Aussie yen, you can see the same thing, but this time I've only just gone with longs. I've left the shorts off, but you know, if they do turn around and we're seeing the yen pairs just really come down here, if we had something like that, I'm not gonna, a bit cleaner than that, obviously. But yeah, if we had something in that region there, then yeah, for sure, I would be looking for a trade down there. But right now, again, it's nothing there. So I'm going to be looking for the long. I'll be going to the 1 hour here. So how it's going to be looking is we break these highs, we show that price is failing to sell. It's not selling, it's accumulating volume to go long, and then I'll wait for the insurance entry just to avoid it being a fake out. But this isn't the real territory where I would usually find a fake out because of how it's structurally made up. It's more moving to the upside. So if I get that continuation breaking above that, that's more than enough. Even if I did get the clear 1, 2, 3 equal space in all of that, I might opt in for the risk entry, just very dependent, but I'm in much more preference of an insurance entry. Even if the insurance entry was there, I'd still take that because there's a lot of room for this to move to the upside. And knowing the characteristics of these pairs can be fairly easy to manage, to be honest, especially if it just starts rallying. So that's basically it for my watch list and wildcards. Obviously, just a quick skim through all the pairs that I analysed. So 4 hour, if you see Aussie CAD, Aussie Swiss, nothing there. Aussie yen covered that, Aussie US dollar, Aussie New Zealand, again, I think it needs more time to develop. I'd look for something like that, to be honest, more deliberate, phase 1, phase 2, 3. CAD yen, possible, but just, there was a lot of pairs. Also, with CAD yen, it had this sort of 1, 2, 3 section here. I just wasn't really interested in looking at those things because, yeah, nothing on CAD Swiss, really. Swiss yen, again, another pair, just because it's below the low and the other one was above the high. I was just kind of like, you know what, I don't want to get involved in something which isn't as clean as the other one. Euro Aussie almost made it on watch, but you look at that corrective channel, man, I'm just asking for trouble. So Euro CAD, nothing. Euro GBP pushes up, comes back. Euro yen, again, it's very similar, very nice. Euro US dollar. Euro New Zealand, nothing. GBP Aussie, Euro GBP CAD, GBP Swiss, probably one of the favourites this week. GBP Yen, took it off watch, just I'm not sure. This one could actually just show signs of just a longer, larger continuation before it goes. I think it needs it, so I left it. GBP US dollar almost didn't make it on watch, to be fair. GBP New Zealand, just, yeah, it's not the cleanest price action of sequence, so I don't want it. New Zealand CAD, New Zealand Swiss. New Zealand Swiss is okay, but again, it's one of them ones where it's corrective. We're in a larger correction, so I don't want to get caught into that. New Zealand US dollar, I don't think if you have it on watch, I don't think it's that bad. I just think, just bear in mind that it's in that, so it could be a bit messy, but it could really play out to be quite a nice trade. New Zealand yen, USD CAD, USD Swiss, and USD yen. Again, USD yen is nice, but I just don't like where it's positioned, so I left it. I'd rather wait for it to just really get into a clear price action area like here. Give me something, something in those regions that will help me. So yeah, that's basically it. I'm going to wrap it up there. This was the first time doing it on the tablet, so I hope it was good. Feedback would be highly appreciated. And yeah, I hope you guys enjoyed this video, and I'll catch you guys in the daily vlogs. If you want another one, I'll try my best to make some more videos and just put them out. Just random videos, things you request. Yeah, cool. Catch you guys later.